Imagine tuning in to a trusted financial news channel, hanging onto every stock recommendation from an expert, only to find out he was secretly profiting off you. Hello everyone. Welcome to another exciting episode, presented to you by Billion Gyan. What happened with Hemant Ghai, a former CNBC Awaaz anchor, who turned his influential position into a personal money-making scheme. And trust me, this is not just another scam. It's one of the most bizarre stock fraud cases in years. Here's how it all unfolded. For years, Hemant Ghai was a well-known face on CNBC Awaaz. Investors tuned in daily, trusting his market insights and stock tips. His recommendations could move stock prices within minutes, a power that most traders could only dream of having. But behind the scenes, Hemant was using this influence to manipulate stock prices for personal gain. Here's how the scheme worked. Before recommending stocks on air, Hemant's family, his wife Jaya Ghai and mother Shyam Mohini Ghai, would buy shares in those very stocks. Then, after Hemant hyped them up on TV, the stock prices would surge, and his family would quickly sell for a profit. SEBI's investigation revealed that 81% of the trades in his family's accounts were linked to stocks he had recommended, generating 85% of their total profits. In other words, almost all their money came from this manipulation strategy. And this wasn't a one-off thing. This was happening for months, between January 2019 and May 2020. So, how did Hemant pull this off without getting caught? Well, CNBC Awaaz had an informal system called Lungi. Now, Lungi might sound harmless, but this was the key to the entire scam. Every evening, anchors would call dibs on stocks via email or WhatsApp, deciding which ones they would recommend the next day. This gave Hemant a clear advantage. He could plan his family's trades before anyone else knew what was coming. But SEBI wasn't fooled. They dug deep into his emails, and what they found was shocking. SEBI was able to match Hemant's Lungi emails directly to trades executed in his wife's and mother's accounts. The correlation was almost 1-to-1. It was the smoking gun that exposed the entire operation. To make things worse, SEBI also found clear evidence that Hemant controlled his wife's and mother's accounts. His email, phone number, and bank details were all linked to their trading accounts. He accessed their accounts from his own devices. His call records showed frequent communication with a dealer at MAS Consultancy Services, the firm executing trades on behalf of the Ghai family. It was obvious this was not a coincidence. This was a well-planned fraud. But SEBI wasn't done yet. They also uncovered efforts to hide the misconduct, including fabricated order instruction sheets and missing trade instruction messages. MAS Consultancy Services, an entity affiliated with Motilal Oswal Financial Services Ltd, allowed unauthorized trades in the Ghai family's accounts, helping Hemant disguise his transactions as those of his wife and mother. This violated SEBI's prohibition of fraudulent and unfair trade practices regulations, and the regulator was now ready to take strict action. And then, the hammer fell. SEBI's 76-page final order barred Hemant Ghai and his family from the securities market for 5 years. They were ordered to return 6.16 crore rupees in illegal gains, along with 12% annual interest from 31st March 2020. On top of that, SEBI imposed hefty fines. 50 lakh rupees on Hemant Ghai, 50 lakh rupees on his wife Jaya Ghai, 30 lakh rupees on MAS Consultancy Services, 5 lakh rupees on Mofsal for regulatory lapses. With all this evidence, Hemant had nowhere to hide. SEBI had frozen his family's profits back in February 2022, and now they were making sure the money was returned with interest. So, what can we learn from this? This case is a stark reminder that even the most trusted financial experts can have hidden agendas. Never blindly trust TV anchors or market analysts. No matter how experienced they seem, always do your own research. Market manipulation is real, and SEBI is cracking down hard. Cases like this prove that fraudsters will eventually get caught. If something seems too good to be true, it probably is. The stock market rewards those who invest wisely, but it punishes those who cheat. Hemant Ghai thought he could outsmart the system. But in the end, the system caught up with him. What do you think about this case? Let me know in the comments. Subscribe Billion Gyan for more finance stories, because staying informed is the best way to stay ahead.